Can't hear you, Ottilia. Ottilia, are you muted? Can't hear you, Ottilia.
Colleagues, please confirm if you can hear me.
Yes. Now we can hear.
Right.
hear you.
Hello and welcome, everyone, and apologies for that technical glitch. My microphone was not muted, but somehow the audio was not going through to all of you. I am Ottilia Maunganidze, and I head special projects at the Institute for Security Studies. It is an honor and pleasure today to moderate this discussion on climate and energy futures, Africa's path forward. This follows research by the ISS's African Futures and Innovation team, exploring both climate and energy futures. Both reports are available on the ISS African Futures website. A link will be shared in the chat in a moment. This morning, or afternoon, evening, wherever you are, you will hear from Dr. Yaki Sinia and Elise Leroux, the head as well as senior researcher at the African Futures and Innovation team, that will discuss both the climate and energy futures for Africa, as well as two discussants, Salim Fakir, the Executive Director of the African Climate Foundation, as well as Professor Abubakar Sambo, the Chairman of the Nigerian Committee of the World Economic Council, Energy Council, my apologies. In this conversation today, we will explore some tough questions around how Africa can be able to develop, currently reliant on fossil fuel energy, and how we can be able to do that as quickly as possible, while also unpacking some of the dynamics related to climate and climate change. Before we go into the seminar, a few housekeeping rules. Please keep your microphones switched off, as well as your videos. During the Q&A segment, as and when I say your name, you can then unmute yourself. And if you want to, you can also switch on your video, pose your question, make your comment, and then we keep the conversation flowing. Before we get into the presentations, we do have an introductory welcome note from Maria Kisumbi from Humanity United.
Dear friends, I am pleased to say a few words at the Pretoria launch of the Forecasting on Africa's Energy and Climate Change Futures that was done by the African Futures and Innovation Program at the Institute for Security Studies. This is the latest in our partnership that started in 2021 with a focus on the long-term effect of COVID-19. The project was followed by a wide-ranging study on how different global futures would impact upon Africa's development prospects. Then last year, we launched a groundbreaking study on the relationship between gender and development. Next week, we will be hosting the African Futures Summit, which is the second one we're hosting here in Washington, D.C., where all 4 studies on global futures, gender, energy, and climate change will be launched for the audiences in North America. The full text of the reports are available on AFI website. Humanity United is pleased again to have partners with the African Futures team. This modeling, we believe, breaks new ground in presenting a realistic pathway for Africa's contribution to a sustainable and reachable future at a time of unprecedented global warming. I'd also like to acknowledge the support of the government of Sweden and the Hans Seidel Foundation, who regularly partner with us at Humanity United in our support to the work on the African Futures team. I hope that you'll find the findings of this report as interesting as I did. Thank you so much for your attention.
Thank you very much. Maria Kisumbi is the Director for Policy and Government Relations at Humanity United. I will now turn over to Elise Leroux, Senior Researcher at the ISS, for a presentation on the climate report.
Thank you, Ottilia. I've shared screen with the audience, and I believe I can see it. So just to say that about 2 years ago, our African Future team launched this African Futures website. So our team spends a majority of our time envisioning Africa's future and using advanced forecasting methods to do so. This is a freely available open access platform, and all of our information, we use this platform to disseminate and to make that freely available. On this website, you have access to each one of Africa's 54 member states, various regions, regional economic communities, and income groups. And we use the International Futures, or what we refer to the IFS modeling platform, to do all of our forecasting work. So this model was developed, and it's currently housed by the Frederick S. Pardee Center at the University of Denver. And there's quite a lot of information also on our website with regards to the intricate workings of the model. It's a very powerful model. It's a global integrated assessment model that is capable of producing dynamic forecasts for more than 500 variables, development variables spanning from things like demographic outputs to economic outputs, agricultural and health outcomes, and so forth. The model is also capable of doing this for 186 countries across the globe up until the end of the century. So our forecast here at the African Futures Innovation Team spans till the year 2043, with the exception of the work that we'll be showing today, the work on the energy transition and the impact of climate change and carbon emissions, that takes a slightly longer forecast horizon to 2063. So why these dates? We've chosen these dates to align with the Africa Union Agenda 2063, and because the policy breach tank Oranepad is one of our key partners on the website as well. The model also has various submodels, and you're very welcome to explore this a little bit further on our website as well. Okay, so as part of this website, and in addition to our country forecasts that we provide, we also provide a series of thematic reports, and we'll be speaking about 2 of these today. So we have Africa's current development trajectory, or its current path, which is the base simulation out of our IFS model, where we forecast where Africa is heading on its current development trajectory. And this really is a story of slow poverty reduction because of wealth inequality, demographic factors, low agricultural output, and so forth. We also model a series of policy interventions where we look at things like what would be the impact of a more speedy demographic transition on the African continent, what will be the impact of an agricultural revolution for Africa's development. And you can also access many of these themes here. And as Maria in the opening address said, we've also recently launched a report on gender equality. And then today we'll be looking at climate and energy. We also have, as part of our website, what we refer to a positive optimistic scenario called the Combined Agenda 2063 scenario, where we showcase Africa's upper ceiling of development potential. Okay, so without further delay, I am going to jump into our climate report that was now very recently launched. And I'm going to take you through this interactive report that we can discuss a little bit today. So I think it is well understood that the world is in the grips of a climate crisis, and that this is driven by the relentless surge in carbon emissions. So I'm putting on the screen CO2 parts per million concentration in the atmosphere. And I think what is also clear is that despite all the various frameworks for policies, for mitigation efforts, atmospheric CO2 levels have continued to rise steadily throughout the past couple of decades. So in 2023, we reached record high levels. So the parts per million in the atmosphere reached 423. So these are observation data. And the CO2 concentration, or the CO2 annual emissions reached around 36.1 billion tons. I think I want to put this in perspective by saying that this marks obviously a significant increase, with 300 or 424 parts per million from the pre-industrial levels of 280 parts per million. And the consequences are dire. The Copernicus Climate Change Service declared 2023 as the warmest year on record. There were a couple of very key and critical climate records that were broken, such like half a days in 2023 exceeded 1.5 degrees Celsius, as well as the critical 2 degrees Celsius threshold briefly being reached in November last year. And to put this into perspective, if we look at the Paris Agreement of keeping the 1.5 degrees Celsius ambition alive, our aim is to keep parts per million concentrations of CO2 in the atmosphere between 350 and 400 parts per million. So our forecast currently on the African Futures website, I just want to show this, is showing us that by 2050, instead of having, so it's this part of it here, instead of having achieved this 330 or 400 parts per million, the world is currently on a trajectory that will see us reach 515 parts per million by the year 2050. So this is concerning because of the impact that this has on Africa. And I think this is also where I'm just briefly going to touch on the following map that shows you 4 decades of recorded and historical disaster, climate disaster related data. So, I mean, what's clear from this map, and this shows the disaster types, whether it was caused by flooding, drought, extreme temperature, or storms, is that Southeast Africa faces a disproportionate exposure to severe weather events. And I mean, these includes anything from convective storms to tropical lows, cut-off lows, cyclones, extended periods of droughts. And of course, this is compounding the risk and the loss of lives, loss of livelihoods that we're seeing on the continent because of our very high levels of susceptibility, but also vulnerability, with more than 30% of the continent currently living in absolute poverty. I want to also just briefly touch on those countries that are currently responsible for some of the biggest emissions. So this is a map that shows you in 2023, the world's top 10 emitters. You can clearly see here from the map, this is CO2 emission from fossil fuel. You can clearly see these top 10 emitters emerging in this map. So we're talking about China and the US and India, also Russia, Japan, Indonesia, Iran, Germany, Saudi Arabia, and then South Korea. And I mean, collectively, these 10 countries are responsible for nearly 70% of global fossil fuel emissions. Africa, as in 2023, is currently contributing as a continent less than 5% of global emissions. This picture is slowly changing. So if I put on the screen our forecast to 2063, you can see this is slowly changing. Africa is emerging. It's a slightly bigger contributor. By 2050, Africa will be emitting around 11% of CO2 emissions. And by 2063, roughly around 16%. So Africa will also overtake the US by 2050, and then India's emissions by 2055. But I think what is also really important to note here is that it's only a handful of African countries that is contributing to Africa's emissions. You can see them emerging here from this 2063 map. If we look at 2023, 4 countries were responsible for contributing almost 70% of the African continent's CO2 emissions. This was South Africa, the largest emitter at 27%, Egypt at 19%, and then Nigeria and Algeria at 11%. However, by 2050, we are forecasting that South Africa would only contribute 7% to the continent's carbon emissions, and Algeria would decline to 5%, but Nigeria will take up a larger share of the continent's fossil fuel emissions, contributing nearly 20%. And we are forecasting that Egypt will contribute 14%, and there'll be other a number of other countries emerging as high carbon emitters like Ethiopia, DR Congo, Mozambique, Tanzania, Cote d'Ivoire, Morocco, and Sudan. I think Nigeria specifically, because of its rapid population growth, but also its abundant oil and gas resources, and it's currently struggling to fulfill its national deterministic contribution commitments. By 2063, we are forecasting that it will be the world's fourth larger emitter, contributing nearly 4% to global emissions from fossil fuels. So it is becoming a significant regional and international contributor. Of course, to affect carbon emission forecasts, we explored a couple of scenarios. We looked at what can be the impact of a more sustainable African scenario. We looked at modeling mitigation and adaptation interventions and options that Jackie's going to take us through. We looked at Africa's energy scenario, but then we also looked at one more mitigation strategy, and that was around carbon taxes. So a global carbon tax framework is something that has been advocated for by institutions like the World Bank, the IMF. This plea was echoed again last year by African leaders at the Nairobi Climate Summit when they signed the Nairobi Declaration, where they also pushed for the establishment of a global carbon taxation regime to be able to finance climate investments. I just want to open this graph for us here. But I think also despite, these pleas, this global commitment to a carbon tax, it's still in its infancy in being adopted. There's currently globally around 37 carbon tax initiatives, and they cover less than 6% of global GHG emissions. There are a number of emission trading systems on the scene, but in totality, it is only Japan amongst the world's top 10 emitters that has adopted a carbon tax, while the major emitters like the US, Russia, India, Iran, Saudi Arabia, they either remain very cautious around these carbon taxing, or they've considered emission trading systems. And we are acknowledging that while ETSs are very effective, there are the concerns that abound around carbon leakages if we continue along this fragmented approach. Okay, so we modeled 4 distinct carbon tax scenarios, each offering insights into what they can do with around to carbon emissions, but also their impact. The first scenario that we modeled was what we called a wealthy pay scenario, that reflects a lot of the international debate as well, where the responsibility lies on wealthy nations, which are held accountable for their historical emissions. And this really reflects the argument around the current development status being largely facilitated by their past emissions. A second scenario shifts the burden to the world's top 20 polluters, compelling them to bear the financial burden of carbon taxation, and therefore placing a carbon tax on those 20 emitters, which is responsible for around 80% of the world's emissions. They also host around 60% of the world population, and they produce around 76% of the world's GDP. The third scenario takes a collective approach. So this is one where we utilize a minimum carbon price floor to ensure a uniform response from all countries in the globe. And then the fourth scenario is what we call a shared responsibility models, where countries are assigned a carbon tax based on their income status. So they are all taxed, but they vary. The taxes vary from $25 per metric ton all the way up to $100 per ton, depending on their income status. So I'm going to open up the impact of these carbon scenarios. So collectively, they all have a benefit to lowering carbon emissions globally. I think if we look at this is the current path. This is CO2 emissions, annual CO2 emissions. This is 2023. We spoke about this 36.1 billion tons. We can see emissions peaking in 2033 on the world's current path that is on. We can see a very stagnant decline, or very, very stagnant. And then we can see this very, very low and slow decline that we are forecasting. So what carbon taxing and a global carbon tax does, it has the opportunity to really significantly lower the CO2 emissions, but such that we are saying that the differentiated pay scenario by 2050 has the potential to lower CO2 emissions by 15% with relation to the current path, and by 2063 by as much as 25%. What I do want to end off with is saying that even amidst this very positive narrative, and we are advocating that the finances that's generated from wealthy income countries can be utilized from these carbon taxes to support developing countries to adapt to climate change, to help them in their energy transition, while developing countries can utilize the resources to attend to their domestic needs. One reality where I'm going to end up before Ottilia giving back to you is to say that even under this global carbon tax framework, there is still a constraint. If we look at this, again, this is parts per million, 2023, 424 parts per million CO2 in the atmosphere. By 2050, this was the 515 we spoke about. A carbon tax in a differentiated pay can bring that down to 508, but still a far way off from the 330 to 400 that is our desired levels, which just reiterates that we need much more carbon sequestration, technologies, new innovations, more efficient energy use, and so forth. And Jackie will speak about a lot of this, and that should be pushed. And that we're also saying that Africa's contribution very largely would come from natural carbon sequestration in the form of its forest and protecting its grassy ecosystems. So Ottilia, I am going to stop there for the sake of time, and then I'm going to hand back to you.
Thank you very much, Elise. Elise has just presented some of the key findings from the Climate Futures report. Before I turn to Jackie, who will present on the energy futures, which are, of course, related in many regards to the climate futures as well. Just noting some of the comments already by Rose Nakame and Jan Roberts in the chat around how we understand development and the connection with carbon emissions and what this means really going forward. Please do keep your comments coming in. We will have an opportunity after all of the presentations to address some of these comments, and then you'll also have a chance, if you wish to raise your hand and make your comment directly to the panel. I'll now hand over to Jackie Celia, who is the head of the African Futures and Innovation team, to present on the energy futures.
Thanks, Ottilia. So Elise has presented the challenge, a challenge that is in all our interests, the reduction of carbon emissions. Now, I'm going to present the other side of the equation, which is really looking at what does Africa need in terms of energy. I'm going to share screen. I'm going to the same website that Elise used, just a different page. So I'm showing you, Elise showed you the climate change section or theme on our website. I've turned to the energy section. I'm going to just put this in presenter mode. I'm going to scroll down. There's a lot on this site, and I'm going to go to all charts on the left, and there are a number of charts I'm going to present from there. I want to start off by presenting what we would consider to be our current path or business as usual energy production forecast. This is, in this case, it has data from 2000, and then from 2023 till 2063, it's a forecast. And energy is produced, is presented in billion barrels of oil equivalent so that we can compare. This is the global, this is the forecast for Africa. This is until 2063. This is other renewables. Other renewables would include mostly oil, wind, solar, but also hydrogen and a few other components. This is gas, oil, coal, hydro, and then a little bit of nuclear. So you can, in the same chart, look at what is our forecast for, let's call it global global oil production, global energy production by type. This would be our current path forecast for energy production by type. For the world, we can see the very steep improvement in other renewables, but the problems with gas, oil, and coal remain on the current path forecast. And of course, we can, if we want to look at a specific country. So I'm in South Africa. and we can look at the South African energy production forecast, which, as we all know, well, South Africans is heavily dominated by coal, and this is the forecast till 2063 on renewables, with a bit of nuclear and so on at the top. So that on the one side, you can explore the current path forecast on the energy production by type for any of Africa's countries and all the major regions in the world. If we were to look at production, energy demand by type, just to give a little bit of context of where the world is headed. So this is demand per person, top energy demand per person in 2023, 2050, and 2063. This is Africa. This is in barrels of oil equivalent. And we can see Africa comes from 3.2 barrels of oil equivalent to 4.9 barrels of oil equivalent by 2050, by 6.4 barrels of oil equivalent. Now, rapid human development really needs about 8.6 barrels of oil equivalent. And Africa, even on this forecast, even by 2063, does not get to that level of 8.6 barrels of oil equivalent. India surpasses that. This is India. This is China, as Ali showed you, which is also the world's current largest carbon emitter because of its very large population and rapid industrialization. This is the European Union, and this is the US, where in the long term, from a very, very high level, there is the potential on the current path forecast of reduction in energy demand per person out till by 2063, well, it already starts a bit before that. Now, what we've done on the site is we had a look at what is possible. The United Nations Environmental Program released a 2023 energy production, called it the Energy Production Gap Report. Basically, what UNEP says is that to keep the 1.5 degree Paris target alive, the world needs to end coal production by 2040, and we need to reduce oil and gas production to 25% of its 2020 levels by 2050. That's what UNEP says. So what we've done is we've tried to model what is the impact of that on Africa. Now, what is important to understand in what I'm going to show you is that Africa, I already made the point that Africa has very low levels of energy production and demand. And that will increase because we have a very rapidly growing population and we come off a very low base. Now, the countries that will be the most affected in applying the United Nations Environmental Program goals and targets are these countries. So this is what we did. We started off by modeling the end of coal production by 2040 in Botswana, Mozambique, South Africa, and Zimbabwe. We reduced oil production to 25% of its 22 volumes by 2050 in these countries. And we also reduced gas production to 25% of the 2020 volumes by 2050, affecting these countries. This is what UNEP reckons is important to keep the 1.5 degree Paris goal alive. I now want to take you to what is the implication of that modeling. So remember that on this website, we present 6 types of energy. Those types of energy are oil, gas, hydro, nuclear, coal, other renewables, and then, of course, the total. On what this chart shows you is this is our forecast of the current path, or the business as usual forecast of coal in Africa. In line with the UNEP recommendation, we reduced coal production to 0 by 2040. So this is our scenario. Then UNEP said oil production needs to come to 25% of its 2020 level by 2050. So this is the current path forecast of oil. And this is what we did to reduce oil production to 25% of its 2020 level. And it also said we have to do the same with gas. Now, the problem with gas is that the current path forecast of gas production in Africa is presents a very sharp picture of increased gas production. but this is our scenario. We reduce gas production to 25% of its 2020 level by 2050. The challenge that we find when we've done all of this is that, and I'm now shifting to total, what is Africa's total energy production by 2063? This is our current path forecast of Africa's total energy production to 2063. And when we remove coal and reduce oil and gas, this is the resulting energy production in Africa. The problem, the challenge that we have is that this leaves Africa, which already has very low levels of energy, with a huge energy gap. By let's go to 2050. In 2050, Africa will, after we've reduced oil, coal, and gas, only produce 4.9 billion barrels of oil equivalent, whereas on the current path forecast, Africa at the moment is expected to produce almost 11 billion tons of oil equivalent. And the question really is, what can you do to fill this gap? How do you compensate for that reduction? So we developed a scenario. We could refer to this as the Africa Energy Policy Scenario after having played around with those forecasts. The most important, so this is what we've done in this scenario is we reduce coal and oil, but we leave gas unconstrained. This is very important and obviously quite controversial. Our finding is that the production gap that is left if you also constrain gas is just too large. You can't close it, even if you increase renewables, hydro and nuclear, reduce energy demand, and so on and so forth. So this we refer to as the Africa Energy Policy Scenario, and we've modeled the impact of this. Just to summarize, we reduce oil and gas. We reduce coal and oil, but we leave gas unconstrained. We push as hard as we can on renewables, hydro and nuclear. We improve energy efficiency in Africa. And then we have also modeled carbon sequestration. Once we did that, now what is important to understand is that that gives us a growth forecast of Africa, or on that forecast, Africa grows on average about 4.4% per annum. And the problem that we have is that it does very little to more rapidly reduce poverty or increase GDP per capita. So in a next step, what we did is we modeled, based on other work that we've done on this website, we modeled the impact of a much more rapid trajectory of development in Africa. We refer to that as the combined Agenda 2063 scenario. Ali's referred to that briefly, and it consists in turn of better governance in Africa, a demographic and health transition, more and better education and infrastructure and leapfrogging improvement, an agricultural revolution, a manufacturing transition, the full implementation of the continental free trade area, and more and rapid financial flows into Africa. And then we have, on top of that, added this Africa Energy Policy Scenario where we've eliminated coal, we reduce oil, but we keep gas unconstrained, we push up on nuclear, renewables, and so on. So that's the work that we've done. Now to show you just to sort of remind you of the challenges that we face on the continent. So this is a forecast of GDP per capita. This is for Africa. This is our current path forecast. This is our current path forecast of GDP per capita. On that forecast, the gap between GDP per capita in Africa and the rest of the world continues to widen. So we then had this combined Agenda 2063 scenario that we combined with the Africa Energy Scenario, which gives us the Sustainable Africa scenario, an ideal developmental trajectory where by 2050, Africa's GDP per capita is not $7,100, but in actual fact is increased to $11,400. On this scenario, Africa grows at about 7.7% annually out till 2050. And this is, for example, would be extreme poverty. So this is our current, this is extreme poverty using $2.15. This is what happens with our current, on our current path forecast. So the percent of population that live in extreme poverty in Africa is at about 31%. On our current path trajectory, it goes down to about 14% by 2050. We know Africa is going to miss the Sustainable Development Goal by a huge margin. On the Sustainable Africa scenario, it goes down to about 4.4% by 2050. So that's the impact of the Sustainable Africa scenario. Just to give you a final, this is a bit of a complicated chart, but so if we now compare the energy mix in Africa in billion barrels of oil, this is the current path forecast. This is where we expect Africa to go until 2063, and it is divided, as it's shown here at the bottom, between other renewables, gas, oil, nuclear, hydro, and coal. This is what happens with a policy scenario with Africa's energy mix, and this is what happens with the Sustainable Africa scenario. For example, you can see the increase in other renewables. You can also see the very rapid reduction, for example, in oil. This is the current path forecast. This is what happens in the Africa energy production scenario. There's what happens with oil. The other important and controversial issue is that we leave, remember, gas unconstrained. This is what happens with gas production in both the policy scenario and the Sustainable Africa scenario. So a bit of a complicated chart, but you can play around. You can look at what that would mean for any individual African country. And you can also look at this as percent of total to see how the energy mix changes over time to look at Africa's energy future. So we have a number of recommendations that we come up with. Elise has already made one recommendation. And Elise's main takeaway is that the international community, the world, needs to agree on a carbon tax. And it needs to use that carbon tax to, amongst others, fund more rapid green transition internationally, but including in Africa. Now, we have not included a carbon tax in the scenarios that I've shown you because Africa is not going to embark on a carbon tax on its own. And remember, Elise had 4 scenarios and the showed what the difference is in terms of the carbon emissions in the different carbon taxes. So the recommendations that we've included at the end is you can read them. We need to rapidly reduce fossil fuels and production and consumption globally. A transition to renewables is a good thing. And this is important. I've not mentioned this. On top of determined mitigation, Africa needs a global emissions budget that we estimate at about 13% global emissions from fossil fuels by 2050 and 22% by 2063. Now, bear in mind that at the moment, Africa emits, I think, at least 5%, below 5% of emissions from carbon. So what we've done is given a first order estimate based on our modeling of what Africa's carbon budget would be going forward. Africa will not be able to close the demand gap, leading to sharp reductions in the production of all fossil fuels, as UNEP recommended. Instead, the continent should be allowed space to exploit its gas reserves, but with every effort to constrain greenhouse gas emissions. The reason for that argument is that the gap in energy production, if you constrain oil, coal, and gas, just becomes too big. So we eventually left gas unconstrained. These are the countries that are affected. There's the challenge of stranded assets. Who is going to fund continued gas exploration in Africa if the rest of the world embarks upon a more rapid transition? There's the mention of the carbon tax, and then some recommendations with regard to debt relief and suspension, and the extent to which Africa is going to need significant support internationally to be able to make its contribution. I'm going to stop there. and Ottilia, and I'm sure that my presentation and that of Elise will have raised significant questions. Everything that I've said is available on the AFI website, and the entire report is available in the section that deals with energy. Thanks very much to listening to me.
Thank you very much, Yaki. Now, before we go into the broader Q&A and comments from the audience, I'm going to turn to Salim Fakir, who's the Executive Director of the African Climate Foundation. Salim, you've heard both Elise and Yaki's presentation on climate and energy futures, which of course do have an intersection. Would be interested to hear your thoughts and perspectives on both of these. Salim, over to you.
Thank you very much, Ottilia, and also Yaki and Elise and the ISS team. I met Yaki many years ago in Spain, and you'll recall the event. It was quite interesting. But I thought I'll make a few remarks, just generally key points around the philosophy of forecasting, because I used to run a policy futures unit, so I'm very familiar with horizon scanning and so on. And I want to put it in what Daniel Kahneman would have said, adversarial collaboration. In other words, the spirit of that. I do think we need to ask, as Philip Tatlock would have reminded us, that experts, when he was talking about political scientists and economists, are notoriously no better than predicting things than an ordinary Berkeley student who's just taken an undergraduate course in super forecasting. And this comes from his 20-year work on good judgment. So we need to understand what insights forecasting provide, and do they help us with good judgment on the ground, really, not at a very high level. So there are dangers of predictions and scenarios and analysis, and we need to be aware of that, because they can give us an illusion of knowledge and knowing often things that we don't really know, and we don't actually know what we don't know. And also, lastly, that I think despite the value of forecasting, they don't really help us often to solve real problems, because they remain. And so we need to have high degrees of humility. I think one of the challenges with horizon scanning, and this is not a rude comment, the higher you go, the more generality and nonsense you can generate with no value for the specifics of specific countries. But it doesn't really tell you how to navigate Nigeria's transition, for example, from oil and gas into something else. And there are many other countries of similar nature. And I think the evidence for that is really in the battle that ISS had in providing recommendations, in my view, which are too general. And you can say, yes, I agree with it. And you can also say, well, I don't agree with it, because in a particular country, actually, they don't make any sense. So I think the recommendations are difficult to generate from a broad forecasting picture as has been presented. And I think that's a challenge that I think the team will need to grapple with. 3-4 other points that I wanted to raise, particularly on forecasting, is that the scientific side of forecasting, which is really the evidence-based, the empirical work, has to be contextualized in a particular country. And political economies of countries do matter, because they actually influence how elites, whether they're progressive or pro-social in their nature, can determine, even if we were to use gas, oil, or other fossil fuels in the interim as we transition, they can affect the development trajectory. They can create a situation of no development, or they can create a situation of positive development. So there is a dark side to the fossil dependency. And there is also a dark side, I might say, to the solution, which is green economy. And I would call it sort of a form of climate capitalism that we also have to understand. So whatever is green is not less angelic or more angelic, sorry, than fossil fuel industry, because they often come from the same sources of global capital. And I want to put that in there in a very provocative way. I'm in no way Marxist or socialist, but I do think understanding the power of capital and how they affect change and development is very important on both sides of the equation. I think the other element of this forecasting, and it might be captured in your other work, is what we call in physics, when I did physics on planetary physics, is the n-body problem or the third body problem. The moment you include other risks into the equation, it makes it very difficult to understand how climate risks merges and intersects with other risks, particularly external shocks that countries may face, for example, debt, issues around pandemics, for example. All of that intersect, and they add more complexity to the forecasting models. Now that I've talked about complexity, there is the problem of uncertainty. So I would go back to Philip Tatlock and say, the most important thing is to try to draw the relevant insights from forecasting, but we should forget about uncertainty and complexity and actually act on the ground. I just want to make a few remarks, and please stop me if I have extended my time, on what I would consider more tighter scenarios to consider in this work, and this relates to work that the African Climate Foundation did, is to look at the 1.5 degree world that, as you mentioned, the business as usual, but there is a world somewhere in between, because not all countries, even advanced economies, even though they are pushing for net zero by 2050, and given that they are creating huge demand for gas and continued investment in fossil fuels, just in the last 3 years alone, the super profits that fossil fuel companies have generated, if you look at Total's continued expansion in Southern Africa, the 200 billion in the last 3 years that have been generated, given the amount of money that is put into wars, very little is going into the climate solutions. Even if Europe and the US can print some money because they enjoy the exuberance of forms of currency that are also, that are reserve currencies for other parts of the world. So the implications of these three different types of scenarios is they have major implications for mature producers of oil and gas, emerging and new entrants like Namibia and other countries. God forbid that if we do move into a net zero world, I wouldn't want to think what would happen to Tanzania, Mozambique, Namibia, who are trying to invest in these resources. So it's not just about the stranded resource problem, but a stranded economy as a whole, that any form of transition into something outside of fossil fuels is not considered, because people are so absorbed by and captured by the fossil fuel industry that the other development options and alternatives, that's the curse of fossil fuels that we need to understand. By no means the solutions can be often an adequate displacement. We call this in ACF a displacement equivalent. And in order to have a proper displacement equivalent to fossil fuels, you need to think about how to deepen the economic diversification in these countries. The three scenarios will also tell us about the way technologies will go and the cost of curves that technologies will reach. So, for example, if China, Europe, the US, and other advanced economies scale up their technologies at a high rate of adoption, they lower the cost for everybody else. That's the public benefit that we see. And so adoption rates in other countries with the right support, let's not forget common but differentiated responsibility that is still owing to Africa and other developing countries. We ought to be able to adopt these at a much cheaper cost. The challenge for Africa, because we do a lot of investment platform work in many countries, is still the long-term outlook on the cost of capital, which is not covered in these scenarios. This is a crucial area. No matter what scenarios you run, the political economy of the country, the issues around diversification, and the cost of capital are all intertwined, because cost of capital determines the rate of adoption. One thing that the the scenarios did not look at very closely is the regional power pools. We can definitely optimize a lot more regional power pools, given that we already have sunk cost in hydropower. The scenarios don't talk about it. And I want to refer to you, for example, to work we're doing in Zambia, where we are seeing the effects of climate on the hydrological cycle and the output of power, that it's affecting the copper industry, for example. There are really good options to optimize the drawing of power from the region. So, for example, certain countries like Botswana, Namibia can generate a lot more renewables, and they could export it at potentially cheaper cost if we had the right power pool arrangement. And so can Zambia also look at complementary effects of renewables and hydro. I think I'm not going to go too much into adaptation, just to say there are other scenarios that one could look at. A world not at 1.5 degree, it would vary geospatially across the continent. We work in Malawi, for example. We seeing the impacts of the agricultural sector, the implications of labor productivity because of extreme heat, and the effects of economies that are weather dependent. Although this is not entirely true in the sense that it's only the effects of climate, but if you look at 70% of cash crops like cocoa production in Ghana and Ivory Coast is already having an impact on their exports and their ability to generate foreign revenue, balance of payment issues. All of these economic issues need to be brought more closely with greater specificity. So I hope I've not upset you in any way or poo-pooed your super forecasting thing, but I just wanted to warn you, caution you that all predictions can have lots of assumptions that can be flawed, but they do generate useful insights. I would not dismiss that. And again, every country has specificity and context that will determine what the kind of action you can take. Thank you.
Thank you very much, Salim. I would say a couple of points, obviously, to the African Futures and Innovation team who've led this research, which is, of course, this evolves as we go, right? They often like to remind us within the ISS that they don't have crystal balls in their offices, and they certainly don't want to have them. But as we work to shape future development, security, and other policy, that it helps to guide that framing. You mentioned specifically, for example, country-level analysis. You mentioned Nigeria. And of course, we're extremely honored to have Prof. Abubakar Sambo, who's the chairman of the Nigerian member of the committee of the World Energy Council, who no doubt can speak to some of the Nigerian issues, but also from a global perspective, Professor Sambo. So I'm turning to you just on your reflections on both the reports that have been presented, but also similar to Salim's input, if you have any additional thoughts and reflections for us as we go into this conversation. And colleagues, those of you I see from the 110 or so of you that have joined us online, a great conversation that is going on in the chat. We are going to bring that conversation to everyone else in a moment. But first, Prof. Sambo, please, we're interested to hear your views.
Thank you very much, Ottilia. I also want to congratulate the ISS for a very good job. The scenario works on the climate and energy are really very good. All that is required is to fine-tune them here and there after this event. Well, I congratulate Jackie and Alice for the comprehensive way they made their presentations. And I noted quite a number of things. I will first discuss the energy one. I am glad to note the three scenarios: the business as usual, the policy, and the sustainability one. they are the way to go. Now, I am surprised. When I listened to the presentation and I checked the recording of the previous session, there are certain things that didn't come out very clearly. Number one, Africa is full of differences, contradictions. On the one hand, the world average electricity consumption per capita is around 4,000 kilowatt hour, while that of sub-Saharan Africa is between 500 and 600. In my country, it's just about 200. I thought I would hear this kind of differences. Definitely, when we have countries like Algeria, Egypt, Tunisia, they are all oil producing and they have electricity access, very nice figures. But Morocco, no oil. Also, it has near 100% electricity access. And Libya, with the problem it had, is not too bad. It's about 70, 80. Whereas my own country, the largest oil producer, is just about 62. And of course, while South Africa, there are a lot of complaints, but when you come to sub-Saharan Africa, you see the complaints in South Africa are nothing. So this electricity differences is one thing that I think I should raise and wonder whether you have considered them properly in doing the scenarios. The second one I want to raise is just energy transition. My country and South Africa have been in the lead of pushing for just energy transition, which means they want to continue using their fossil fuels to develop their systems. And in the case of Nigeria and the 17 other members of African Petroleum Producers Organization, the focus is gas. In my country, we are trying to shift away from oil to gas. And that's why you hear about auto gas, compressed natural gas, LPG, and so on and so forth. And in fact, Nigeria is more of a gas country than oil because the reserves are so much tilted towards gas. So I don't know whether you've considered this gas issue in the scenarios. The third point I want to raise, about 14 years ago, the International Renewable Energy Agency, IRENA, based in Abu Dhabi, was created. And one of the things it was meant to do is to push and facilitate uptake of renewable energy. And it has been going from continent to country, from country to country, coming with renewable energy roadmaps and guiding nations how to entrench renewable energy. And a few countries are picking up, like I've seen in your maps. And so if that one is properly taken into, then the contribution of renewables by 2050, 2060 could be higher than you have predicted. The fourth point I want to raise is that many African countries, I know Egypt, Ghana, Nigeria, there are others, are pushing for nuclear power because nuclear power, there's no carbon dioxide emission. This problem is something else, disposal of waste. But with what the International Atomic Energy Agency is doing, the waste disposal is becoming less and less of problems. And the beauty, like in the last COP28, IEA was there in a very big way, trying to promote nuclear power because of lack of emission. So I wonder if you consider this. I didn't hear much about the nuclear thing. Of course, I'm sure you are aware, apart from Namibia, Niger, neighboring Nigeria, has uranium. Even in Nigeria, we have uranium that is not developed. And what we at the energy plan side are thinking is to get a nuclear technology power country to go into the mining of uranium and processing it into fuel rods and to build and operate nuclear power with us for some period. So that's what we are thinking. And I think Ghana too is thinking along that direction. The other point I want to quickly raise here is that the African Development Bank has, over the past few years, been pushing African states to facilitate the establishment of production plants to locally manufacture renewable energy components like solar panels, solar deep cycle batteries, charge controllers, and so on and so forth within African countries. And this one to fit into the African Continental Free Trade Agreement. So the few countries to produce, they take it to the FTA to be marketed all over the continent and even beyond. So with all this, I think the situation will be different. In addition, two other points I want to add. And the World Energy Council for the past 10 years or so has annually been producing what they call World Energy Trilemma Index. The idea is to show the performance of countries. The Trilemma Index has been criticized by developing countries as something produced for the advanced world. Well, to me, I say, yes, it could be like that, but it also gives an indication of where the African states are. And African states can use the index to see which advanced country they can partner with to help them out of their energy poverty. Because, Africa is the region of the world with the worst energy poverty. So that is one thing, World Energy Trilemma Index. And the other one that I would like also is produced by World Economic Forum. That is the World Energy Transition Index. Energy Transition Index also is a guide to show countries of the whole world. Not all countries are there, but I've seen about 30 African countries in the most recent edition, and that will help African states to see where they need to go to improve their energy transition. These are the areas I want to raise now under the energy. For the climate future, I noticed two things. My country actually pledged in Glasgow that the country will stop using gas by 2040, and the country will attain net zero by 2060. And these two major points were repeated in Cairo and the most recent outing in Abu Dhabi. So with this, I'm surprised to see Nigeria will be the worst emitter come 2063, given the fact that we have produced our nationally determined contributions for abating climate change. Even the second version, I was involved in the second version, which was released 2023. Of course, producing the plan is one thing, implementation is another. But I will quickly say that Nigeria has set up an energy transition office under the presidency. So with these arrangements, I'm really surprised that our level is so bad in terms of emissions. The second point under this emission issue is that while carbon capture and sequestration, to me, is going to work for the huge carbon emission plants, like coal power plants. But in a country like ours, with 230 million Nigerians and the largest vehicles on the road in the continent, the largest emitter is the transport sector, and you can't capture that. And the best way we are advising government to do is to plant forestry plantations, which are excellent carbon sinks. That is going on. In a group I belong, we made presentation to the Ministry of Budget and Economic Planning to take this issue of forestry plantation. We think the forestry plantations will capture the widely disparate emission of the transport sector, which you can't capture, like you capture the emission from coal power plants. So with this, again, I'm surprised to see that Nigeria is going to be worst emitter come 2063. I'll stop here for now. I hope I've covered enough for discussions.
Thank you very much. You've brought into the conversation again the nuances of and the need for country level analysis, both on climate and energy, but bringing into the fore the just energy transition, considering, of course, as you rightly point out, that there is discrepancies between countries within Africa on energy access. So how many really are transitioning to a just energy future where we have hundreds of millions of people currently that have no access to the forms of energy, electricity that others already have. You raised questions around waste, around alternative sources of energy, such as nuclear, and then, of course, around ways in which countries can offset their potential impact on climate change. So these are the range of issues that have been brought into the basket for the 25 minutes of discussion that we have coming up. In the chat, there have been a number of points that have been raised, and I'm going to throw these to the panel immediately, while those of you that would want to pose your questions directly to the panel can start to raise your hands. In order for you to do that, go to the bottom of your Zoom screen, press on reactions and raise your hand. I will then cede the floor to you to make your comment or pose your question. But here are some of the issues that have come out in the chat. Fatima Mimbire has asked who will finance oil and gas projects, while Johan is saying polluters should pay. I'm going to pose this question to you, Elise. When we say polluters should pay, who are those and how do they pay? And then, in response to Fatima's question, who will finance the oil and gas projects as well? So not only the general compensation, I suppose, around existing pollution, but also future projects. Then Gwyn Foster has spoken to opportunities in agriculture, a point, Salim, that you raised around some of the opportunities there. So would be interested to hear your views on the inclusive carbon standard, but also around the ways in which the broader green economy, factoring in agriculture, can be part of our future. And then another question to you, Salim, is what are your views on the Sustainable Africa scenario that involves huge gas consumption in 2063 and beyond, whether you see this as credible and whether it should be taken seriously? And I would also pose this question to you, Prof. Sambo. You've spoken now to Nigeria's commitments in wood around gas reliance and production. But what are your views on whether the Sustainable Africa scenario is realistic? And then to you, Yaki, integrating climate and other risk is a question that Christelle Murray has brought to the fore, and she raises this as the real challenge based on both scenarios and maybe reflecting on the South Africa risk report that the IRMSA will be producing this year. What are your views on this nexus between climate and risk? So not climate and energy, but climate and risk. So first to you, Elise, to respond to those questions. Who should pay and in what ways?
Thanks, Ottilia, and thanks, Salim and Prof. Sambo, for your very, very valuable remarks. And I wish this was a much longer discussion, but we can unpack many of those. Responding to the discussion in the chat around the carbon taxing and specifically the polluter pay scenario. So we did, as I explained, looked at 4 of these scenarios, and there were 2 that looked at. One was a polluter pay scenario, where we tax a very high tax on just the world's top 20 polluters. And then we had what we called there was also a discussion in the chat that spoke about the moral responsibility of everybody contributing to this. There was a scenario that looked at everyone pays a very low carbon tax. And then we had a different scenario where we looked at what we termed the differentiated pay scenario. And of all the modeling that we've done, or the forecasting, the one that came out strongest in terms of reducing carbon emissions was the differentiated pay scenario. So the polluter pay scenario does have an impact. It's got the second biggest impact. So there's definitely value in saying that polluters should pay. But what we are arguing for and what the differentiated pay scenario showed is that it is a collective responsibility, but based on your income, you get taxed at a different income level. So wealthy, high-income countries, which is the same argument almost that's driven in the polluter pay scenario, are taxed at a much higher level. And then developing countries are taxed at a much, and low-income countries specifically taxed at the lowest band of carbon taxing. So then taking this band from $25 all the way up to $100 to say that it is a differentiated pay scenario that will have the biggest impact. That then infers that everybody has a responsibility, but some people have got a greater responsibility. And that is to reiterate what Salim said around that principle of a common but differentiated principle that should be applied, and that should be taken into account here as well. I think, and then also what we are saying, Ottilia, to just end that point, is that this carbon taxing, if it's low-income countries that raises carbon tax and funding, that should be invested domestically to address domestic needs. And if it's higher-income countries that are generating carbon taxes, some of that investment should be funneled towards developing countries to address their adaptation and mitigation needs. I'll stop there.
Thanks a lot, Elise. I'm then going to turn to you, Salim, in terms of the questions that have been posed. Sure. But as you are responding, there is a pop-up that is coming onto your screen, colleagues. This is really just to rate the seminar so far. Your thoughts and comments are always very useful to the ISS to improve on our events, but also to learn from you on what you're interested in. The best way to get rid of the poll from your screen is to respond to the poll. Once you're done and press submit, the poll disappears from your screen. Salim, over to you on the two main questions posed to you.
Thank you very much. These are very important questions. So I think on the whole, the shift from gas on the continent is largely highly dependent on the shift away from gas in the rest of the world, because most African countries are net exporters of gas. There are very few countries that actually utilize gas. So the sustainable scenario, I think, will be determined by demand, both present and future, and the degree to which countries that have gas are interested in utilizing it. So, for example, even in a country like Tanzania, which has gas, it's more likely that gas will be used along more the coastal areas. In the interior, it's very hard to get gas into the interior, so you have to look at other solutions. So, again, you can't have a universal view of what a sustainable pathway is going to be like. But 55 countries with different political economic systems, different economic structures and institutions that will determine the degree to which gas becomes a main source of energy in the future. The track record on sustainable economies is very poor, even for gas and oil producing countries. You can just look at Egypt, Nigeria, Algeria, Libya, Angola. These are major oil and gas producing countries. So what are the factors that have not cause these countries to become more sustainable? So if a track record is poor, how can we be sure that a track record on a gas-dependent model is ever going to be also lead to more sustainable outcomes? And the reason for that are a couple. Again, the problem of demand. Where does it come from? Secondly, the issue around who are the main players in the extraction business? Is it national oil companies? Is it foreign? What is the typology of the foreign companies? Is it state-owned? Is it private? There's a problem of profit shifting, which is a big problem in Africa. More profits get taken out of the continent than aid is received. And in fact, remittances are even bigger than ODA at this point in time. So people working outside of Africa are contributing more flows of capital to the continent than the oil and gas industries is actually supporting. This is the irony and paradox of the whole thing. There's a problem of elite capture. We know that very well in South Africa. You can see what happens to utilities. It's a problem across the rest of the continent. If you have high debt, highly indebted economies will have to pump out more extractives, and I'm not just talking about fossil fuels, in order to pay off their long-term debts. Again, the structure of the debt, is it privately owned? Is it publicly owned? Or is it domestically owned? All will determine the future trajectory of those countries into a more sustainable area. The less diversified oil and gas economies are, if we can't reduce the total GDP output from 30% to less than 3% of the total economic output, we're going to have a problem of continued dependency and not sustainable economies. A sustainable economy does not also mean that we have solved the problem of inequality as well. You can see we have a very good democracy in South Africa, high wealth, but high levels of inequality, with remarkable Gini coefficient that's going in the wrong direction. Important is to look at political pressure, other forms of ways of pushing more focus and consciousness about the need for transition to better economies, and lowering the dependency on fossil fuels. Because if the world does move suddenly into a different trajectory where demand is dropped, these economies will be crisis. Even an economy like Nigeria, which I think will have in the next 30, 50 years, the fourth largest population in the world. Africa's young population alone will be the quarter of the world population. So we've got some challenges and opportunities. I don't always like talking about negative things. There are amazing positive things we can do. And on the agriculture front, I think we got to move away from subsistence farming. One way of solving that is to actually increase electrification, so that farmsteads and farmers can actually diversify local household economies to other things, processing. They can do other type of tradable production that can diversify and create more resilience for farming, because the source of income for farming is very marginal, making farming practice very tough. Even for well-established farmers, it's very difficult already. So just imagine for subsistence farmers. And what will contribute to better improvement in agriculture is not only knowledge, better state support, but also good trade policy, good financing, and we should also have a very strong outlook on regenerative agriculture. One thing that the study did not talk about, it talked about a lot about carbon taxes and so on, but did not talk about the carbon border tax adjustment. It's a big omission in this work. It will really have implications. It could be both positive and negative for the African economies. It's dependent on how it is applied, whether it's a blunt instrument. And by the way, the CBAM is going to generate a lot of revenue, but it's going to stay in the European continent. And India is putting forward a proposal through the G21, where it is looking at retaining CBAM, finding ways to retain revenues from CBAM for India's transition to low carbon transition. So thank you very much. I think I'll leave it at that.
Thank you very much, Salim. Prof. Sambo, I'm turning straight to you. The main question here for you really was around whether or not the Sustainable Africa scenario, which does involve high gas consumption, based on what you've said in respect of Nigeria, whether you see this as a credible potential future, whether Nigeria is going to meet its verbal commitments with action over the next, how many years is it? 29 years. Over to you,
yes,
Prof.
Yes. Thank you very much. Yes, the issue of gas, I have already mentioned that we are working with the Ministry of Budget and Economic Planning to make carbon capture and sequestration through forestry plantations. And with that, the emission from the gas, as we all know, is about 40% of that of coal. So it's much lower. There's even operation directly on this, much lower. So with the lower carbon footprints and with these plans to have forest, we have semi-desert, we have Guinea savanna, we have tropical rainforest. There's a lot of room for plantation already. Tree planting activities, there are year-round activities in Nigeria. It has to be just increased, that's all, and it will fit this. And I also notice there's a question of financing the oil and gas. I'm sure you all know that the European Union has agreed that gas is a transition fuel. And the African Petroleum Producers Organization, 18 of them. So the African oil countries are not just few. They are about 1/3 of African continents, and they are increasing. More are getting oil, and they want to set up an energy bank to be supported by European Union and some groups from Latin America to do the oil and gas projects, more of gas projects than oil projects. So the funding is coming. I picked a question that nuclear power plants are too costly. What we are doing, along with the other countries that I'm aware, is to get the nuclear technology power country to come and do the plans through the build, operate, and transfer after 15, 20, 25 years. So the African states will not put any amount of money there, and that will be done in a very sustainable manner. But those countries are also interested in our uranium deposits. So we'll say, well, welcome. Come process the uranium, produce nuclear fuel rods, build nuclear plants for us, and we operate for some 20 years, and you hand over to us. So that's the plan. It can be made sustainable.
Thank you very much. Yaki, I'm going to come to you in a moment around this integration of climate and risk as the real challenge. But as always, where our partners are also involved in a range of other activities, that's always useful for us to use this opportunity to advertise that as well. So thank you, Zimkita, for sharing Gibbs's executive course in green economy modeling, which will help people gain skills to predict and shape the economic impact of green policies. Colleagues, if you go to your chat, you will see the link there to be able to register for that course. I think beyond conversations like this, we are always committed at the ISS to taking these conversations forward, whether we're the ones leading them or its partner organizations doing so. Yaki, back to you on climate and risk, and then we will have a little bit of time at the end for a couple more inputs that have been put in the chat. So the crisper your response, the more time we have for an extra round of conversation. Yaki.
Thanks very much, Ottilia. I'm going to share a screen and just show one or two things that may help. I really enjoyed, and thanks very much for the comments, Salim and Professor Sambo. There's very little that you said that I don't agree with. Actually, nothing. And I just, the reason why I'm sharing the front page of the website is just to, on the geographic side, to first just point you in the direction of the various country reports that we've done, which are all very extensive. I've just clicked on Mozambique as an example. And if you go to the left-hand side, you would see each of these reports are quite extensive and look at, for example, what is going to happen in each of the countries, Salim, that you and others mentioned, by Nigeria and so on and so forth. And for example, for each of them, there's like 60 charts and associated data. This is just Mozambique, same for Nigeria and so on. The other thing that so there's a lot of detail there, and we actually at the moment are updating and revising our report on Mozambique, and we've spent a lot of time looking at the gas in north of Mozambique. I wanted to point on to some of the thematic work that we've done. For example, in the section on financial flows, we look quite extensively at foreign direct investment, ODA, remittances, and illicit financial flows, and model them. And in the section on agriculture, we model the effects of an agricultural scenario, agricultural revolution on Africa, including the associated inputs that are required. So there's a lot on the website that you can have a look at. I wanted to respond very briefly with regard to the nuclear and renewables issue. You may remember that I showed this chart, I think it was chart 8, where we looked at energy production by type. Where we are, there we are, where I showed the modeling work that we did to explore the feasibility of moving away from oil, gas, and coal in Africa. This is coal. What I wanted to show is just the nuclear forecast, because Professor Sambo in particular made some remarks. And as we know, There's a large nuclear build going on in Egypt, and there are a variety of African countries have expressed interest. But the small and modular nuclear plants that may provide an option are still a decade or so away, it seems, from commercialization. And then, of course, by plugging them into our regional power pools, which there was also some mention on, could do a lot with regard to alleviating Africa's huge energy problem, because Africa's energy demand is literally going to go through the roof. Our forecast is that I think it's by about around 2060, Africa will release more carbon than China, and by about 2080, Africa will be the largest have the largest energy demand globally. Okay, we're comparing Africa with its 55 countries to China. And the last remark just is to make the point, I didn't make it in my presentation, is that Africa's largest contribution to the future in this space is really to serve as a carbon sink. And there was some mention of that in the discussions. So thanks, Ottilia. I'll stop there.
Thank you very much, Yaki, for that, but also for really bringing to the fore, when we have events like this, colleagues, it's an hour and a half. It almost feels a bit like a marathon for those of you who run really fast. But the African Futures and Innovation website, with which we partner with AUDA NEPAD, includes scenarios for 54 member states of the African Union, and also reflects, as Salim in his input provided, also the high-level analysis on specific thematic areas. So if Yaki and Elise presenting from the website wasn't invitation enough for you to go onto the African Futures website, explore specific countries that you're interested in, specific areas or themes that you would want to know more about, please do so. And while you are there, you are able to ask the website some key questions, and you will get answers from the website on all the issues that are there. So if you can't explore, you can certainly ask and get your answers. To my panel, I'm going to pose one final question inspired by Karen Goldberg from Rios Partners. We've spoken about the issues quite extensively. I'm going to ask you each very briefly, no more than a minute, to give me your take on how we can be able to actually unlock a better either climate or energy future for Africa, or both. I'm going to start in reverse order. So first to you, Prof. Sambo, how you see this. You've already spoken a little bit on Nigeria, so would welcome your wish list, but only the top thing on your wish list, not all of it.
What I would really like is for the ISS to fine-tune a little bit from this session the two documents they've prepared and submit to AUDA NEPAD so that the entire African countries will have them. When it is sent from African Union Commission to the member states, they will take it very serious. And with time, some of us involved in the Nigerian energy planning activity will see it. When it comes, I will quickly get in touch with you to say your work has materialized.
Thank you very much. Yaki, top of your list.
Thanks. I was so enamored by Professor Sambo's comment that I've completely forgot what I was going to say. Professor, we actually, in fact, work with NEPAD. You will see that on our logo, it says ISS African Futures with order NEPAD. So we will encourage them. I think the main challenge that we encountered in doing this work is just how to reconcile the very large increase in Africa's energy demand with the fact that renewables, we can bump it up as much as we can. We increased it, I think, almost fourfold by 2030, which is very aggressive, but it comes from such a low base. that Africa will have to look at nuclear, at hydrogen, at hydro, and so on and so forth. So balancing Africa's energy, growing energy demand due to its growing population with its low energy production at the moment, how to close that gap is on the one side the big problem, and the other side, how do we, how can I say, monetize both a carbon tax and the support that that can provide, as well as monetize the use of Africa's natural resources, its forests and so on, as a carbon sink. Those are the two issues that really are front and center in our analysis.
Thank you very much. And Elise, since Yaki gave us 2, you give us half.
Okay. The half one is, I think, adaptation investment is absolutely crucial on the African continent, particularly given the current development trajectory that the world is on. We should invest in adaptation, be it in community level, infrastructure level, in economies. Climate adaptation investment is crucial.
Thank you very much to Elise Leroux, a senior researcher in the African Futures and Innovation team at the ISS, Yaki Salia, who heads that team, Abubakar Sambo, who represents Nigeria on the World Energy Council, and Salim Fakir, who was with us also from the African Climate Foundation, and all of you who joined us today for this discussion. As we already said, this is by no means the end of the conversation. If we take what Prof. Sambo has suggested, is to take this conversation country level, local level, get people engaging on questions on climate and energy. All of you who stuck with us right to the end, we really appreciate it. And to Humanity United, the Hansado Foundation, as well as to Sweden, we appreciate the funding support that makes this work possible. It's 12:30 in South Africa. Wherever you are, we wish you a great rest